Hey everyone, welcome to another training of how to buy a rental property with an LLC. Again, welcome to my channel. I'm excited that you're here. Now, don't forget to hit subscribe if you're not yet subscribed to this channel, because every week on Tuesday, we release new tax strategy content. Remember, if you have a tax preparer, you do not have a tax planner. And today, we're going to talk about how to buy a rental property with an LLC. Specifically, we're going to break it down into four parts, right? Part number one is what are the benefits of really having an LLC in real estate, right? A real estate in an LLC, it should be. All right, oops, first mistake. Anyways, I'm continuing. Number two, how to buy a rental property or an investment property with an LLC. And number three, can you transfer a property you already own to an LLC? And the fourth thing we're going to talk about is using a family management company to actually manage your rentals. This is a little bonus I included for you guys, so we'll get right into it. So anyways, benefits of having rental property with an LLC, right? Number one is liability protection. Now, what happens is that, look, anything that you own under your own name, right, you're exposed to liability. If God forbid somebody sues you for something, or you have issues in one of your businesses and you have creditors or people that are suing you, they can come after all of your personal assets unless you have some kind of an asset protection setup, right? One of the first things to start protecting your assets is, of course, shielding your assets in entities such as an LLC. So it protects you from liability on both ends, right? So if you've got a rental property inside an LLC, okay, if something happens to a tenant or something happens to that property, or somebody wants to sue you, they will actually going to have to sue an LLC. So it really gives you that protection, right? And every state law has different rules in terms of how it is, what that protection is, and how much it protects you. Obviously, need to make sure you are compliant with your state rules and laws. I always say that every time there is an involvement of an LLC of different entities or asset protection, right? You have two people that you're working on. Number one is always a must, a tax planner. And when it comes to asset protection, you always want to make sure you have a good asset attorney on your side. Clients that we work with, obviously, we introduce them to those attorneys and we kind of all work together, okay, to make sure that the client is properly protected from any liability when they're setting up. Okay. Number two, it's really easier to invest with partners rather than a corporation, right? So for example, LLC has what's called the members. Okay. It doesn't have owners, it doesn't have partners, it doesn't have well, I guess they're partners, right? It doesn't have shareholders. What it has is members. Okay. So it's easier for you to set up an LLC and bring in members that will together with you invest into a rental real estate. When you're receiving K1s from that partnership, now K1 just shows your share of income and expenses. Each partner will receive his or her K1 right appropriately. Okay. And of course, privacy. Some states allow you to actually shield your identity and have privacy when you have an LLC. So that's, some people want to do that. Some people want to remain private. So that's one of the main benefits of really having a rental property within the LLC. Okay. Now, how can you buy a rental property with an LLC? Okay. Well, let's kind of start with that, right? If you want to buy a rental property with an LLC, you need to incorporate your LLC in your state. A lot of people make a mistake. They say, you know what? I'm going to open up an LLC in the state of such as Nevada, Wyoming, or Delaware. I'm sure you've heard, but the property is not there. You actually can't receive your legal protection, right? That if you don't register the LLC in the state that the business is operating, unless you re-register the company that is in states like Nevada. So first and foremost, you always want to open an LLC in the state where you own a rental property or where you own an investment property. Then you would have to apply for EIN number. Now, whoever incorporates you can apply for EIN. Please do not make a mistake of trying to open your own LLC with the companies that are out there online, or get your own EIN. Yes, it's simple these days. It's as 1, 2, 3 is going online. But really, when I diagnose myself, for example, I realize I have a cold, right? Would I go try to write out medication for myself and be like, you know what? I know last time I had cold, this is what I took, so I'm gonna do it again. Would you do that to yourself? No, right? So the reason I'm telling this to you is that every time you apply for you open an LLC in your state, you have to be aware of the applicable state laws. Very important. Some require operating agreements, some don't. Operating agreements should have certain wordings in it, right? Then applying for EIN. A lot of business owners apply for EIN. It's so simple online, but if you by accident check off a wrong box, it's a whole mess with the IRS and dealing with them. So please let the professionals handle it. I'm not advocating our services because we actually do not open up entities in my firm. I'm just kind of giving you a warning of please try not to do these things on your own. But yes, if you want to buy a rental property with an LLC, first things first, open an LLC, apply for EIN number, and then open a separate bank account. Okay, you go to the bank, you open up a bank account, you transfer money to that bank account from your personal funds, right? That will be your contribution to your LLC, like the owner's equity. And from that, you can buy a property. The question really becomes, is it that easy to buy a property with an LLC? Well, you might run into some hurdles, right? If you're doing all cash purchase, you're your own boss. Nobody can tell you what to do and how to do it. You've got your own cash, full cash purchase. You go to the buyer, I'm buying a property. Excuse me, you go to the seller and you say, I'm buying a property. A seller could care less if you're paying with an LLC or you're paying for it personally. Now, when you have a mortgage, that's a different story, right? When you have a mortgage, you have to seek bank's permission to use an LLC, and not all banks would allow you to do that. So there are some lenders that would allow you, no problem. You might have to, do some of your due diligence and look into that and see which allow you. Some won't. Some say no, we ain't dealing with that. It's got to be under your personal name because we want you to be personally liable for the loan or whatever other reasons that they might have. So before running to open your LLC, start doing that due diligence, see which bank would allow you to be able to do that. Now, can you transfer a property that you already own to an LLC? Right? That becomes another question. Well, Boris, I already own a property. It is under my personal name. And what do I do? Right? Can I transfer it? Now, there's a few things, right? You have to consider there could be potential transfer and legal fees, which is you probably have to do a quitclaim deed with your state county or county, the city county or county's office, whatever that is, right? There might be some legal fees, which is okay, because it's worth it if you're doing it for liability protection. But another thing is potential issues with a mortgage transfer. What do I mean by that? So if you already own a property under your name, right? You own a property under your name. Just take a sip of water. More like a cold tea. All right. So if you own a property under your name and you have a mortgage, before you make a transfer to an LLC, you might want to check your mortgage documents and make sure that your mortgage actually allows you to do that. Some mortgage companies, when they give you a mortgage, okay, what happens is that they say in the mortgage contract that you signed with them that you're not allowed to transfer the property out. If you do transfer the deed from your name to another name, such as an LLC, you would be liable for the entire mortgage without waiting for it for 30 years. So really, really important before you jump the gun and be like, all right, cool, let me do this. Let me transfer the existing owned property already to an LLC. To an LLC, you might want to check that. And the reason I'm telling you all of this, I don't know how often you talk to your accountant, but if you have a tax preparer, you do not have a tax planner. In order for you to be able to strategize on these types of things, you need to constantly be talking to your tax planner. Okay? Look, if you have a profitable business, I can guarantee you right now, you're probably overpaying in taxes and doing the things wrong. Your structures are wrong. Your entities are wrong. The way it's classified is wrong. Why? You probably do not have a tax planner. So make sure you always have a tax planner in the back of your pocket. Okay. The last but not least, what we are going to talk about, give me a second here. Last but not least, what we are going to talk about is a family management company to manage your rentals. And this is a little bonus that I'm throwing in here for you. Now, here's the thing, right? When you start owning a lot of properties, now what they're considered, let's just assume in your case, right, or whoever's watching it, for example purposes, you buy a single family residence, or you buy a commercial property, or you buy a multifamily 2 or 3 units, right, another single family, double family, whatever that is. Each one of those properties is a separate property, right? It is recommended, right, to for asset protection, for example, to put everything into under each of its own LLCs. Some people could say, you know what, Boris, these properties are not that worth that much. One is 70,000, another one is 30, another one is 40. I'll just put it into one LLC. You certainly can, right? You certainly can. That's up to you. But if you own a portfolio of real estate, right, you would probably have separate different LLCs. And guess what? Even if you have 3 properties, right, in one LLC, according to the IRS, when you file your taxes, you have to report each property on what's called a Schedule E, right, which is a profit and loss from rental properties. And it doesn't matter if you have 3 properties under one LLC. They're like, no, they have it in columns, right? They want to see profit and loss, how much rental income you had, and expenses, including depreciation, for each property. So becomes a little tedious, right? So why am I telling you this? When you have expenses, when you have different columns you have to report, it becomes harder, excuse me, it becomes harder to track your expenses, because the IRS wants to see expenses for each one of them separately. What you can do instead, if you own a portfolio of real estate, is set up a family management company that manages your real estate. Now, the only thing that your properties will report is the rent roll coming in, minus mortgage interest, property taxes, and possibly insurance, right? Not possibly, for sure, insurance and management fees. They're going to pay management fees to your management company. Now, your management company, which is you, now have some advantages. You can travel without trying to record for each one of these properties. You're traveling to manage the properties right away. Bam, right off. Meals expenses, bam, right off. Hiring your kids. You can actually hire kids to help you manage the properties and write off up to $13,000 per each kid, right? $12,950 to be exact, where your kid doesn't pay any income tax on it, because we have favorable rules in the tax code for anybody that's making up to $12,950. The tax rate is 0, right? And if you don't have any retirement account set up and you want to start putting money into retirement or whatever that may be, you can also set up a retirement account on a family management company. So it's really, really important to know that you can actually do this. The family management company could be a single member LLC or a multi-member LLC, you and your spouse. You can also convert it to be taxed as an S corporation or a C corporation, depending on your situation, right? Again, tax planning is where it comes into the picture, right? You need to make sure you are tax planning for these kinds of things. Do I need an LLC? Why do I need an LLC? How is it going to help me save money on taxes? Is it going to help me save money on taxes, right? Really, LLCs are set up for the fact to help you protect for your asset, to help you protect your assets when it comes to rental real estate or an investment property. I hope this was helpful. Hey, if you have watched this far, you probably enjoyed the video, so please go ahead and subscribe to my channel. Every Tuesday we'll release a new video. There are some helpful links below the video as well. I appreciate you for watching it, and hey, till next Tuesday.